Markets think Trump's tariffs are dumb, inflationary, chaotic, reckless. They're wrong. Because behind the noise is a strategy to reset the debt, break the system, and build something entirely new. And if you miss it, you're not just behind. You're the exit liquidity. The market sees tariffs. It sees Trump shouting on TV. It sees prices going up. So it thinks this is just like 2018. More trade wars, more chaos, more noise. It thinks Trump is trying to punish China. It thinks this is about winning votes. But that idea is wrong. That's the setup. Trump's plan isn't about one policy. It's about control. Control over the story. Control over the system. Control over where the money flows. Tariffs are just the first move. They aren't the real goal. They're the pressure. They shake up the market. They force people to react. That gives Trump power. It gives him attention. And it lets him reset the game. Most people don't see it. But if you do, you stop watching the noise. And you start seeing the play. Everyone thinks Trump wants to bring back cheap gas and low prices. But that's not all. Trump's real move is to reset the debt. How? By letting inflation rise and pushing interest rates down. That makes America's old debt easier to pay back. The dollars are worth less, but the number stays the same. That's a quiet default. Savers lose. Debt gets wiped. And no one has to vote for it. This isn't a mistake. This is the play. Inflation is the tool. The Fed is the blocker. Tariffs are the trigger. He wants to inflate his way out of the hole and reset the scoreboard while no one's watching. Pay back less. Blame no one. That's the real strategy. Trump talks about jobs, but he's not just helping workers. He's building a new class of winners, a new power group. Right now, tech and finance call the shots. Wall Street, Silicon Valley. Trump wants to move that power back to factories, to energy, to industry. He's pushing for high tariffs, big tax cuts for U.S. producers, and more drilling and building at home. This isn't just about trade. It's about who gets rich next. If it works, money leaves San Francisco and flows into Ohio. He's not stopping globalization. He's rewriting it. So it starts and ends on U.S. soil. This isn't trade policy. This is empire building. Every system has rules. The Fed stays independent. Allies stick together. Trade deals follow global law. Trump doesn't like rules. He likes leverage. So he attacks the Fed, threatens NATO, and ignores the WTO. Why? Because rules limit him. Breaking them gives him space. If Powell cuts rates, Trump wins. If NATO cracks, Trump gets paid. If trade deals fall, Trump writes new ones. Most leaders fix the system. Trump flips the table. If the old rules block the win, he deletes the rules. Inflation scares most politicians, not Trump. He doesn't want to end it. He wants to steer it. Gas prices go up? Blame Biden. Wages go up? Take the credit. Rates drop? Say it's because he forced the Fed. This isn't about numbers. It's about story. He doesn't want inflation gone. He wants it pointed. At his enemies, not his base. Make energy cheap. Raise wages. Lock in low mortgage rates. That's not chaos. That's strategy. Inflation isn't a failure. It's the frame. Every Trump headline is a spike. One day it's tariffs. Next day it's the Fed. Then it's NATO. Then it's war. It feels random, but it's not. Each move creates volatility. Each threat moves prices. And while the market panics, Trump says he's the only one who can fix it. He's not in the chaos. He's driving it. Drama isn't a bug. It's the product. Everyone talks about de-risking from China. Trump wants more. He wants to cut it off. 2 tech stacks, 2 economies, 2 worlds. His plan is to block Chinese goods, punish U.S. companies that invest there, and rebuild factories here with cheap energy. If the world splits, money goes where it's safe, where it's strong, where it's protected. Trump wants that to be America. If the world breaks apart, he wants America to own the biggest piece. So step back. High tariffs, low rates, cheap gas, strong military. What does that look like? It looks like a country that runs alone, that doesn't need help from China or Russia, that sets its own rules. Factories here, energy here, capital here, deals made with force, not permission. This isn't isolation. It's power, monetized. Trump doesn't want to fix the old system. He wants to leave it. If you own the pipeline, the factory, and the missile, you don't ask, you tell. If Trump's strategy works, he won't just change policy. He'll change where money flows. And that means new winners and new rules. Because when the system resets, the edge moves, not to noise, not to apps, but to real things. We're entering a hard economy cycle. It starts with factories, it ends with control. And here's where the capital's going. First, hard tech. Not just software anymore. We're talking about parts, tools, machines, sensors, semiconductors made on U.S. soil. Everyone chased AI overlays, but the real money builds what AI runs on. That's CNC tooling, advanced materials, defense supply chains. It's the hardware layer. Finally coming back. Second, Tier 2 and 3 supply chains. Not just made in America, made from America. Ball bearings, circuit boards, filter systems, generic drugs, battery metals, the boring stuff. But it's the layer we gave away, and now we're pulling it back. That's where the leverage is. Third, water and infrastructure. America's next war, it's with drought. This isn't about panic. It's about control. Control over water means control over crops, migration, and land value. So watch. Desalination, AI utility grids, rural telecom, smart irrigation. Power moves local, and so does the value. Fourth, local AI and robotics. Not chatbots, not APIs, real-world AI. Robots in small factories, crop models for smart farms, co-pilots that help, not replace. AI isn't just software anymore. It's a multiplier for labor. Plug it into the real economy, and you don't get layoffs. You get scale. Fifth, alternative credit. If the Fed looks weak, if banks pull back, someone still has to fund the rebuild. Watch for private credit deals, asset-based lending, on-chain treasuries with real-world flows. When institutions freeze, liquidity moves off-grid. That's where wealth hides and grows. And what's at risk? The shiny stuff. ESG narratives, SaaS companies with no margin, AI startups without hardware, biotech stories that need 10 more years. That money fades because the edge is rotating from digital promises to physical returns. One more thing. 2 catalysts no one's pricing in yet. Insurance collapse. As climate risk rises, whole regions may lose coverage. That means private risk markets and a new insurance stack. And the second, parallel economies. If Trump breaks global alignment, BRICS grows, crypto scales, states go solo, Latin America builds its own rails. Money will not wait for policy. It'll move where it's trusted and where it's needed. So here's the play. Real economy, local power, analog alpha, minerals, machines, water, supply chains. That's where the edge is going. And the smartest capital, it's already moving.